Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me today is Shrishti Sharma. And this is the show where we take you through all the stocks that are in news today on the back of news flow or on the back of technical charts. But before we get started with all the stocks that are in focus today, let's take stock of how the markets are faring. Shrishti, a massive blowout coming in Indian markets as an effect of the global sell-off that we saw after those hawkish comments by the Federal Reserve. And Nifty has actually slipped below 24,000 levels as well.
Well, certainly, Ankita, and that's the level that we are trading below right now as well, because Nifty 50 is now down about 245 odd points, and Nifty Bank is also trading lower with 600 points of cut. What we have seen is that the markets were seen to be stabilizing. They were trying to find some ground, and that's what they have been successful doing that, because there was indeed a recovery attempt on an intraday basis, but it seemed to be once again drifting lower. But the good part is that at one point in time when India VIX was up by around 7%, that has actually cooled off, and that's just 1% gain is what we are seeing on that particular index. The breadth of the market and the number of advances, if we see on the NSE advance and decline ratio, that has actually improved. So that is another positive factor that we are focusing on. But sector-wise, it's indeed the pharma that is indeed in pink of hell, because DrRed is leading it from the front after the hike in Nomura's target price. DrRed is now about around 4%. Other than that, Cipla, Sun Pharma, some of the other counters that are gaining. But on the flip side, it's the IT pack that is seen to be a bit under pressure, definitely taking cues from the global handover. But not just that, all eyes will be on the IT counters on the back of the Accenture earnings that are expected to be posted today. Other than that, Asian Paints is also one of the top losers after some of the exit at the higher management. But all in all, Ankita, what we can say is that yes, indeed, a day of weakness coming in for the benchmark indices. But on an intraday basis, we have seen a recovery attempt for the benchmark indices and in the broader markets.
Absolutely, Shrishti. And then let's get started with all the stocks that are in focus today and why they are buzzing in trade. For that, we have Rajesh Bhosale, the technical analyst from Angel One, joining us on the technicals. And from our research team, we have Gaurav. Hi, good afternoon to the both of you. Thank you so much for joining us. Well, we're talking about the weakness in the market now, but the new kid on the block, that is IKS, backed by Rare Enterprises by Rakesh Jhunjhunwala company, that has seen some good listing today. Shares listed at 1,900 per share on NSE, a significant premium of 43% over the issue price, and the price band for the offer was 1,265 to 1,329 per share with a lot size of 11 shares. With the listing, the market capitalization of the company has reached 32,977 crore rupees. IKS share listing was better than the expectations in the grey market, which is an unofficial market, of course, for trading an IPO share till the listing. On the BSE, IKS stock was listed at 1,856 rupees per share, a premium of around 40%. Now, the company's IPO was entirely in OFS of 1.8 crore equity shares by the promoters and individual shareholders, with no fresh issue component coming for IKS. But a good listing seen for IKS in the somber market. IKS is in focus today.
Well, certainly, and what a bumper listing, Ankita. And we also spoke actually with the management as well. So let's go across and listen out to Sachin Gupta, who is the whole-time director and CEO, and Nitya Balasubramaniam, who is the CFO of the company, on the growth and the margin outlook going ahead.
By the next 10, 15, 20 years, we should be able to deliver growth that is far greater than the 12% at which the TAM is growing. And then you already know that we've established a unit economic model that is fairly strong and industry leading. And we believe that there is some more tech leverage to be had. We are transforming Acuity Margins, the company that we acquired last year. And so that's going to kick in as we go forward. And so we are fairly confident that over the next at least 3 to 5 years, earnings growth will be even faster than revenue growth.
And in terms of margins as well, we hope to touch a steady state of around the early to mid-30s EBITDA margins. With the Acuity acquisition, you'll note that our margins had come down because the acquired entity had a lower margin profile. So we will therefore be able to grow faster in terms of the bottom line. And once we hit that steady state, I think margins will probably stay at that level.
All right, moving on then from that bumper listing to United Spirits. That's the name you've picked out for us on the charts, Rajesh. Now, this counter has done well for itself in the sense, in the last 6 months, it has given us some 24% returns. Last 1 month also, it has been moving up, with 6% returns. From here on, what are the levels that you're penciling in for United Spirits?
Well, good afternoon. And yes, definitely United Spirits have shown tremendous performance in this week. While the broader market has been under pressure, this stock has done well. and on the daily chart we are seeing a inverse head and shoulder pattern breakout, and also in the last couple of sessions we have seen healthy long formation in this counter, and we expect that this positive momentum will continue, possibly towards its previous swing high somewhere around 1640. So any dip is buying opportunity. The stock has a strong support somewhere around 1540 to 1530 levels, and on the high side 1650 will be the first potential upside target.
All right, then that's the day coming in on United Spirits. But with this, let's move on and let's shift focus to SpiceJet now. That stock is seen to be flying higher, and the stock is seen to be surging 8% in intraday today. There's, yes, indeed, a very good news flow coming in for the company, because the company does say that the company has actually gone ahead and settled with their lesser Genesis, and they have actually settled a more than $16 million dispute with the company. And not just that, in the lieu of this, Genesis will actually acquire a stake worth $4 million in the airline as a part of the settlement. For the settlement, the airline will also pay $6 million to Genesis, because do remember, the company actually did raise around 300 crore rupees with the financial headwinds, and they were also planning to actually pay back to all the lessors and the company that have raised the money with, and they are trying to settle with all the parties that they are eligible to pay back. And it's indeed a positive news flow coming in on SpiceJet, a move in the positive direction, and hence the stock is on the up move today.
All right, moving on from SpiceJet to BPCL. Coming to you, Rajesh. BPCL, what do you see on the charts for this counter?
So PC entire OMC counters are in burst, and BPCL as well is showing strong traction. It is up by 2% in today's session. In the morning, we saw that prices testing the levels of November swing low, but from the morning hiccups, we have seen strong traction, and the stock is trading in a strong green. Also on the RSI front, we are seeing positive divergence in an oversold zone. Short-term bottom has been done and possibly headed towards 310 levels. So any dip could be a buying opportunity as long the 280 levels for the BPCL are held.
All right, the stock is seen to be holding above that 280 levels and is ready to fly as Rajesh takes on this one. But Gaurav, take us through what's happening with DrRed, why this stock is one of the top gainers in Nifty 50 today.
Well, yes, DrRed is buzzing, and this is on the back of the Nomura's recent price update. What they have done is that they have actually upgraded the rating as well as target price. They have upgraded the target price to 1500 versus what it was at 1300 earlier. What they are saying is that stock has recently underperformed the sector over the last 1 to 5 years. Now the risk reward is favorable for the stock. When we talk about relative underperformance, they are suggesting that the concerns about high contribution of GREV limit are already priced in the stock, and now street is also concerned about the higher contribution of GREV limit that could start declining in FY26. Furthermore, there are some further further problems for the company, but what Nomura is highlighting is that there are some upsides coming up from GLP-1, which is biosimilar, and it is not fully factored into FY27 estimates. And on back of this, they are now factoring in EBITDA at 19.6%, which is much below its peers. But at the same time, they are also raising their multiple target to 32.5 times price to equity to come up to a target price, and as a result we are also seeing some uptick in the target price as well as the short stock price. So definitely watching out on this counter on the back of bullish note coming up from Nomura.
Alright, that's DrRed's lab gaining 4% in trade on the back of that note from Nomura. But the entire, Nifty Pharma is, doing pretty well for itself, holding on to the shade of green in an otherwise sea of red. Torrent Pharma is the name that you picked out for us, Rajesh. Another pharma name. Tell us, this one has been doing pretty well for itself. From here on, where does it go?
Yeah, so entire pharma space in a buzz, it's acting as a defensive role, and in the pharma index itself, we are seeing a range breakout after a couple of months. So pharma space, we are definitely bullish on it. One counter, that is Torrent Pharma. This is a high beta counter, and today we are seeing a inverse head and shoulder pattern breakout. On the volume front, we are seeing strong volumes. Also on the future fronts, we are seeing long formation. So high top, high bottom, and we are expecting that the stock can head towards the 3700 levels. So 3400 is the support, and 3700 is what we are expecting in the next couple of sessions.
All right, that's the day coming in on Torrent Pharma. But with this, viewers, it's now time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back. Welcome back to Market Fatafat, where we are highlighting all the buzzers in trade right now. We do have Gaurav on the research side as well as Rajesh to guide us technically. And Rajesh, let me come to you for the next counter. And you have picked up one of the beaten down names, that is Tata Consumer Products. Yes, indeed, there has been a lot of news flow, and that's why the stock has been hammered. But in the last 2 days, the stock has seemed to find some foot around and trying to find some ground there in the market volatility. So how do you see the setup, and is this stock ready for a jump from these levels?
So yes, definitely the stock is in news, but as you highlighted the last couple of session, the stock has shown some respite. Exactly around its November swing lows, the stock prices are showing some base formation. On the oscillators front, if we see, the stock is in a oversold and positive divergence are witnessed. On the intraday charts, we are seeing some range shift. So we are expecting that as long the stock hold on to its 900 levels, a bounce back can be expected. So possibly 950, 960 can be expected as long 900 levels are sustained.
Alright, that is Tata Consumers on the charts, but another stock that's completely blown out in today's trading session is Asian Paints. In fact, that stock opened another 2% lower today, declining to its lowest level since April 2021 after the company announced the departure of some senior officials. Now, India's largest paint manufacturer on December 18th had announced the resignation of 2 senior management members, Shyam Swami, Vice President of Home Improvement, Decode, Services and Retailing, and Vishu Goyal, who's the Associate Vice President of Retail Sales, Commercial and Marketing, who resigned on December 17th, and that has come into effect now. The company has not provided details on the reasons behind their departure, but on the back of 2 senior management officials resigning without a reason, Asian Paints is seeing some cuts of almost more than 2.5% right now.
All right, then that's about Asian Paints. We're moving on. Let's shift focus to Zydus Life Sciences, because that stock is in focus after the company has got a final approval from US FDA for linodecine and pre-low casein creams, and just not going by the technical name, just to highlight that these creams are used for topical anesthesia usage. And if we talk about the annual sales of this particular product in the United States, then that's not a big amount, but yes, indeed, that's close to around $22 million only. But this indeed is seen to be on the positive side, and given the up move that we are seeing in the pharma space, just thought so that this is a company that we should highlight at this point in time, because sometimes in such market movement, even a slight positive news also works well, and that is Zydus Life Sciences, because the stock is trading at the day's highest point.
All right, coming to you, Rajesh, you picked out Coromandel for us. Tell us, what are you seeing on the charts for this counter? I mean, if I look at the chart, in the last 1 month, it has given some 5% returns, 3% returns in the last 6 months, just 16% from here on. What is the upside for this counter, and what are the levels that you're penciling in?
So yes, definitely the stock is in a uptrend, continuously moving in a higher bottom formation, and we are seeing that any dip is getting bought into around 20-day EMA. So yes, bias remains positive. Even today after morning dips, the prices have been bought. So we expect the possibly stock is headed towards 1950 to 2000 levels. The stock has support around 760. So as long this levels hold, the bias remains positive.
All right, the biases seem to be on the positive side, but moving on, and Gaurav, talk to us. What's the latest with respect to Swiggy? Seems like it's like the stock which is one of those brokerage favorites at this point in time.
This newly listed company is not stopping at all, because now JP Morgan has initiated with overweight rating and a target price of 730 rupees. They have cited Swiggy as a dark horse of Indian local services, and why they are saying is that they are seeing Swiggy to catch up across both food delivery and quick commerce segment because of the renewed focus and improved execution from the management. They are also saying that they are seeing some kind of critical scales across both core businesses, which will enable Swiggy to expand faster than its peer and also be profitable in the next 3 years. When it comes to valuation, what they're saying is that Swiggy currently trades at a 32 to 42% discount to their closest peer Zomato, which appears overly pessimistic to them, and they are also saying that Swiggy is emerging as an underappreciated winner in the Indian local services ecosystem. On the back of this, when we talk about stock performance also, it is up 0.7% once again, and when we talk about the performance, it is up more than 20% since its listing. So definitely watching out on this player on the back of positive note coming up from brokerage.
Absolutely, that's Swiggy in focus almost every day on the back of those brokerage notes. But let's go across and listen into the top market experts on where these new age stocks are really headed.
Certain pockets in the fintech space, which I think are now fairly valued. So I think easy money making phase is gone for a lot of stocks. But so you have to be very selective. I'm not saying that Zomato is a sell. All I'm trying to say is that it might not keep moving at the same pace, and you need to be very careful making fresh commitments at these prices, which I don't think is justified. Many other companies, that are really doing well and are standing out. For example, a car trade, which has been a favorite for us, and we've recommended it to our clients multiple times in the past. We like it as a good story for the next 2 to 3 years. A Nazara Tech, a great play on gaming, sustained very well in the October correction, doing very well in the recent past. That's setting up well. But some of the other names like Swiggy or, many such similar names which people have been talking about, I'm not a big fan.
For me, one is the new technologies are dematerialized and they scale up so fast that they become available to the poorest of poor. And that's where most of the wealth will be created. Earlier times, the wealth was in physical people. That's why it's called capita. What do you mean by capita is number of heads you had. Then it became land, and now it's becoming the new games, new experiences which you will create virtually. And for me, the next 50 years will create more wealth out of those newer things.
Demand is going to be a constraint. These are the tech companies, the consumer tech companies or the fintech companies are the ones where everybody's going to run for. My belief is that the compression in margins for most of these established brick and mortar players in the consumer space has been because of the consumer tech companies as such. Quick commerce, food delivery, all these spaces are going to look very exciting.
All right, then that's the expert's take coming in on Swiggy. But moving on then, and let's shift focus to NMDC then. And Rajesh, I'm coming to you for your take on this one. How do you see the stock moving ahead?
So we do see further weakness in NMDC. Yes, the stock has bounced in today's session, but overall yesterday we saw a sharp sell-off, and because of it on the weekly chart we are seeing a major breakdown. So we are expecting stock likely to slip further towards 195 to 200 levels. So as of now, the bet would be to avoid this counter.
Alright, that's NMDC on the charts, but with that it's time for a quick breather. You don't go anywhere after the break. We'll get you some more stocks that are in focus today. Stay tuned.